Okay, let's go ahead and get into the stock market technical analysis. I've been pretty quiet on the public channel. I've been posting a few things in the private member group, but we are in holiday trading, half days. Christmas Eve was a half day. In general, I typically are going to kind of suspend stops and not pay too much attention to really low volume holiday trading, and that's primarily because the it's not market consensus. Okay, the big institutional traders, the big money, is not moving billion-dollar positions on a half day of Christmas Eve. It's very light, algo trading and retail trading, and it's not market consensus. It doesn't give me information in terms of what the market's doing, so I don't pay attention to that kind of stuff. Here's triple Qs though. I'll dive into it. You can see here's kind of the 3 days, kind of the holiday float. It was about 4 days really during the holidays, and we're still really in holiday trading. I mean, you can still consider the fact that we are in holiday trading, but we did kind of float back up. They recovered this trend line on the bearish rising wedge on the daily chart, but again, here's kind of my thought process of that. One, they were able to recover the trend line in very thin holiday trading, which means it's not market consensus. Okay, it's low volume trading. Two, they, on the sell down, the big breakdown right here, this big red candle on the Fed, we had a lot of volume. All right, we had strong volume on the move down before the holidays. Essentially, that is market consensus. You did have full market participation on that move. And it was, and the volume speaks to that, and then the recovery is low holiday trading with no volume. So in general, I go with the move with the volume. Okay, that is telling me where the market actually is, the most market participants, what they're doing. So that's one. Two, you have bearish, you have negative divergences that have been building on this wedge for a while. Okay, so that the momentum has been telling me look for a turn. And then the final thing is you have a bearish rising wedge pattern. Okay, and that pattern has not played out. The major target is the widest part of the wedge, and I just kind of draw a line. And then you take that at the point of the breakdown, and that's what my little blue line down here is. It's the major target of this pattern. So that's where I think we're heading. Okay. And today, you can see the price action, we're breaking back down. So again, it is choppy trading for sure because of the low volume. But what I continue to go with the larger market consensus behavior, and that is, down. So that is the daily. Now, here's the weekly. The other thing you also want to kind of, take into consideration on the weekly chart of triple Qs, we have a bearish engulfing candle right there. That's a topping candle. Treat that as a top when you see it at the end of extended uptrends. All right. You don't treat a bearish engulfing that you see early on in an uptrend as a topping candle, because it's typically, they come at the end of extended uptrends, especially when you have negative divergences building. Okay. And we do on the weekly. Okay. You can see the momentum's been dropping off. So again, that's it. It's a very simple trade. Treat it as the top and, stop out if we get a weekly close above there. And then, we don't really have any business closing up there. So if we do, you'd want to stop out and say, okay, that's not the top. Otherwise, you treat it as the top for that move. And the major target, I like that for the first drop down. And I'm seeing a drop of about 10.5% in the triple Qs. The other thing with bearish engulfings is you want to see follow through on the next candle. And again, this is a weekly chart, so we had to wait till today for this candle to close. But intra-week, we're way up there, and you can see where we're at now. We're down near the bottom. So, I'd be looking for this to continue to sell off into the close today, and that will print a break of this bearish rising wedge on the weekly chart, print a lower candle against this bearish engulfing candle, giving us confirmation. So there's a lot, I'm building a case here, and I think there's a lot of proof, technically at least, that we are likely going to go down minimum to the major target. I do expect the bulls will buy the 200, but here's the thing. If you look at the weekly, You can see the bulls have been buying the 200 since March of 2023 on the weekly chart. So, you know, they got above they were below the 200 in 2022, finally got above it here in early 2023, tested it, and they bought it. All right, rally. Tested it again, they bought it. All right. Tested it again, they bought it. All right, so, you know, I mean, at some point, they're not going to buy it. It's not going to hold. Now, well, you know, the way to trade it is you get down to the 200, just wait for the 200 to break in order to kind of short the thing. I think I think it is a high probability trade right now to short it down to the 200, but I'd want to cover my shorts down there, wait for that to break, or you could go long if you're bullish, and you know they have been buying the 200, so that's an objective area to go long for sure. But again, the more times you test it, eventually it's going to break. So that's kind of my thoughts. Flipping over to some of the key stocks of the triple Qs and really the S&P 500, which are these large cap tech stocks. Nvidia, all right, we're in a downtrend. It's a short-term downtrend. You know, we can't say it's a longer-term downtrend right now. The longer-term uptrend, which started all the way back here in 2022, that's your longer-term uptrend. That's been broken. That trend has been broken, clearly. The sell signal, you had a pretty definitive sell signal right here back on Friday the 13th. And of December, and that's a definitive sell signal. Clearly broke. You can see here they broke it. They recovered the next day. Finally got started to kind of crack and close below there, and nice definitive sell signal. So they sold it, hit support, kind of the first level of support, ran up to it for a back test, and looks like we're heading lower. So I've got a short-term downtrend because we've got lower highs, all right, and lower lows. So it's a short-term downtrend. I think we're going down to the 200-day moving average, and then again, bulls will likely be buying that. I mean, in general, that I would put really good probability that the bulls are going to buy the 200 on Nvidia down here around 117.50 or so, because when you look at Nvidia and I roll out on the daily chart, we have not tested the 200. It hasn't even reacted and hit the 200 since it broke out of it back in January of 2023. We've virtually had no tests of the 200-day moving average, a simple moving average, for that entire time. So I would put really good odds that the first test of that in over, basically over a year, the bulls will buy it. All right, so that is that. I think we're heading down for that test. Google, you can see, it's kind of chopping sideways. There's a breakout over the former high at 190.84. You can see there's the breakout, but that breakout came with negative divergence on the on the RSI and the PPO. So high probability that this breakout fails and we start to head lower. It's not the cleanest chart. I've been having to kind of move the lines to make a trend on this one. But yeah, so I'm kind of watching it. It's not my favorite. Apple to me broke trend. I mean, on the daily chart, you can see there's your uptrend line on the daily, kind of a short-term trend. Broke trend here, back tested over the holidays, getting rejected today, impulsively rejected. Today's wiping out the last 3 days worth of kind of float up, being wiped out today. So we'll see where that closes. But in general, looks to me like kind of the top basically, or the near-term top in Apple. You've got the negative divergence kind of showing up. And yeah, so and obviously the triple Qs, I made the case there. So this should get dragged down as well. Kind of the target I'd have on this one, I gotta kind of get rid of some of these lines, but would be the former breakout high. That's where the bulls will be sitting at most likely, right down here at 237.25. Okay, so that is a drop from where we're at now of about 6.5% or so. I think triple Qs will be down about 9-10%, and you'll have Apple down there hitting support. You should see some bulls show up trying to buy it down there at support. Microsoft, interesting enough, kind of coming into some support here on Microsoft. You can see here, this was kind of a former downtrend line or a triangle, broke out and looks to be back testing, coming into the 200, a little bit more downside there. And then, the bulls should be buying that. They should be. So we'll see where that one ends up. But, Microsoft also does kind of chop through. You can see, look, it chops through the 200 quite a bit. So I wouldn't rely on the 200 as complete strength there. And with the position of the triple Qs and what it's showing, I think we could see actually more downside in Microsoft. We might have even just had a false breakout on this triangle pattern, and we were going to break to the downside. So that could have been just a big, huge bull trap. We'll see. Again, it depends on what this looks like when the triple Q starts hitting some of those lower targets that I have. Meta, one of my favorites actually. It's a very clean chart. When I roll out on the daily, you can see here, if I can get that to scroll, there's the uptrend line going back to November 2022. You can see we've got support. There's some support. There's kind of a break of support, basically. Definitively broke, really right through here. And this candle, this big red candle, I would say is a definitive sell signal, a break of trend. But like the market likes to do, just when you get a sell signal, they like to run the shorts out, or try to at least reverse it and do some back testing. So to me, that's all that was. This just looked like back testing. Big negative divergence at play on the daily chart. So momentum has been dropping. And I could even, this line here, I could even redraw it. You can see right there. Negative divergence. And it is, clearly a sell signal, an objective back test, or objective to go short, as you're back testing. And it looks to me like it's moving lower. This one creates a big bearish rising wedge, and you have a major target that I have. It's marked in blue right there, all the way down, all the way down here around 370.50. Now we've got some gaps to fill. There's a big gap to fill right there. So I don't know if I'd hold out for that full 370.50. You might want to just, I'd very likely want to pull the short right at the gap fill, or not even, I wouldn't even wait for the gap fill. I'd wait for it to get close to approaching the gap fill, and that's likely where I would pull the short. But that is a drop on Meta, if we get down there, of about 30%. So I like that for the downside. Amazon, kind of creating this bearish rising wedge as well. It's been whippy for sure. This was earnings, so breakdowns that occur right before earnings have a high probability of being whipsaws, a higher probability for sure. And then, recent price action, just kind of holiday, they popped it to the upside on that holiday float, or the pre-Fed. That was basically pre-Fed. Here's the big Fed day, which is, big rejection. And then they've kind of, tried to recover, but still looks like it's basically at resistance. And so I would expect us to head down to the bottom of this channel and the 200 day. Somewhere, it depends on where the 200 is, but maybe 201.70. You have to see how far down that is. Down to there would be, if I can grab the tool, sometimes it's, 8-9% down to the bottom of that channel. So yeah, that's what I like on Amazon. I still like GE as a short. It's starting to turn back down, but on this one, you've got this big upward pattern, and it started to create a bearish rising wedge right up here. So then you take the widest part of the wedge, and that'll give you your measured target. Take it at the point of the breakdown, and you can see in blue, I still have a target of around 132.50 or so. That's your former breakout high way back there. So I like that as the target, and you can see we got the sell signal back tested, so objective to short on a break of support or a back test of resistance. So those were your two objective entries. And then we fell right to the 200. You had a reaction now at the 200, which is expected. It broke below, but then quickly snapped back up. So you got a reactive bounce off the 200, and we're starting to turn back down. I could see us going a little higher. We could get up to 175, or when things are in a downturn, oftentimes They don't give you an objective entry, and they could just be turning this thing down, heading down to that lower target. So I like it as a short still. Whether it goes up a little more to that resistance or not, I do think it's heading down to that target, which is about a 21% drop from kind of current levels. And interest rates, again, this is another key indicator that I've really been watching for why I think we're going to see some more downside, because interest rates have not fallen. All right. In fact, they continue to rise. So again, this is TNX. This is kind of the opposite of the TLT, but it's basically just showing the 10-year Treasury interest rates, which most debt instruments are based off of the 10-year, at least consumer debt. And you have basically a downtrend line here. There's a reaction there. 3 reactions validate a trend, and you have a breakout, a break of trend. So interest rates have broken the downtrend. They're heading higher. That's not my opinion. All right. That is what's happening. And until, so again, until the higher this goes, the more pressure it's going to put on the markets. So I think eventually if we go much higher, I think eventually you're going to see panicking in the markets, money moving out of stocks into bonds. They'll start buying the 10-year because of the yield. And then as money flows into bonds, then the interest rates can start to come down again. And that's likely when you'll see the kind of the bottom in the market, right? So as the interest rates start to come down, then the markets can start to find some relief, and you can get bounces. But we're not seeing that. So I think higher rates, markets come down. As the markets come down, they move into bonds, which then rates will start to drop. This one also looks really good. FITB, big bearish rising wedge, big negative divergence, break of the wedge, hit the first support level, which was at my first target, and then I was expecting a bounce or a reaction, and we definitely got that. You did see a bounce. On the bigger picture, it does look like a bear flag, which you'd want to see strong impulsive selling resuming to confirm that as a bear flag. Regardless, though, you have the widest part of the wedge is the major target, and take it at the point of the breakdown. So this one still has a decent amount to drop. I think it's still probably going to drop another 20% to its major target. So I like that. Again, you're going to need to see the large cap tech stocks start to drop. Basically, when those large cap tech stocks are holding up, everybody feels comfortable and confident that the market's going to hold up because they're indexed. They're indexed to the SPY. They're heavily weighted. So if they're holding up, then then there's money flow into the index, which in turn goes into stocks that are indexed and kind of props the markets up. So a key indicator I feel of the markets dropping and things like this bank stock dropping is to see those large cap tech stocks starting to break down. And we are seeing some of that today. So, just to go back, you can see they're all down a decent amount, and we're starting to see some selling. So look for the selling to continue. If we're just getting kind of day-to-day chop where tomorrow everything's up a bunch and the next day it's down and we're just chopping around, then we're likely not going to see big moves either way, one way or the other during this holiday trading. But if we string together, starting to see a trend of kind of consecutive days of losses, then these stocks like FITB will likely start to play out to their major targets. So that is what I have. If you're interested in the private member group, additional trade ideas and concepts, I post those in there. So link in the description below to join that, and I'll catch you guys on the next one.